Well, the stock market's raging, and the traders all shout. There's one man we're watching, his moves full of clout. Some call him evil, some call him foul, but I just smile and call him Daddy Powell. Ow! Will Jerome Powell nuke the market again? With a flick of his wrist, make fortunes disappear in the wind. In the wind. Wall Street's a jungle, lions on the prowl. But the king of the jungle is old Daddy Powell. Oh, Daddy Powell. Oh, Daddy Powell. Every single time, it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down. The numbers are flying, red ink and green. For some it's a nightmare, for others a dream. Degens are crying, theories disavow. All bending the knee to mighty Daddy Powell. Oh, Daddy Powell. Oh, Daddy Powell. Every single time, it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down. The bulls and the bears are locked in a fight. Who knows if we'll feast or starve come the night? With a glance at the screen, I let out a howl when I see that old motherfucker, old Daddy Powell. Oh, Daddy Powell. Oh, Daddy Powell. Every single time, it's like a fucking roller coaster ride. It's gonna be a crazy week, so hold on tight. Oh, Daddy Powell, don't bring me down.
Oh, brother, oh, brother. Good morning, and welcome back to a specialty day of the Matt Kohrs Show, where I guess I want to say happy Fed Day to all of you who celebrate. We are getting an FOMC result, a Fed interest rate decision today at 2 p.m. Eastern. Set an alarm, set an alert. I don't know what you need to do, but it's gonna be a crazy one. So the Fed interest rate decision comes out at 2 p.m. Jerome Powell will then be speaking 30 minutes later, i.e. 2:30. We're going to be streaming the whole thing. So really today, I would say, is fairly thought of 3 independent days. We're going to have the session from 9:30 to 2, 2 to 2:30, and then 2:30 to market close. It really should be thought of 3 completely independent sessions today. So I hope you guys are ready. It gets into some really, really nerdy stuff here. But the big question of the day is what in the world is going to be going on with the Fed's portfolio? Maybe you've heard it referred to as the balance sheet. More specifically, what are they going to be doing with the balance sheet runoff? Are they going to be pausing, slowing down, completely stopping? Are they not really going to be giving us any answers? But I will explain this probably. We might as well do it, like, I guess, closer to the actual time, or maybe we'll do it in the afternoon stream. I'll give you all the stats, facts, and figures, but the overall TLDR is, I think it's $6.8 trillion are currently on the Fed's balance sheet. And right now, we know that the debt ceiling is going to be kind of an issue. And in 2019, when they were trying to run off their balance sheet. It caused a lot of havoc in the overnight lending market, and we're wondering, is that going to happen again? Because they're bringing it down, and as reserves are dropping with all of the banks, things are getting a little bit spicy, not crazy spicy. We're not at like the Briani level yet, but we're potentially getting there. So we already know that we're not going to get an interest rate change. Like if you're coming here like, oh, are we going to jack up rates, lower them? No. We're staying at 4.25%. That's not what's going to move the market. What's going to move the market is all the discussion surrounding what are we going to be doing with the Fed's balance sheet, aka the Fed's portfolio. That's the name of the game today at 2 p.m. and at 2:30. But of course, between now and then, we're still going to have some fun in the world's largest casino. So we have quite a bit to talk about beyond just the Fed decision. Of course, we have the overall backdrop over here of the tariffs, the trade war, what's happening. Remember, the big day that we're supposed to find stuff out is April 2nd. And then on the other side, big news as of yesterday and overnight, the ceasefire talks between really Trump and Putin, but now that is expanding to Zelensky today. Allegedly, Trump and Zelensky will be speaking today. So we have global political turmoil, we have trade turmoil, and now we have just economic, monetary, inflation, balance sheet turmoil. So that's the name of the game today. We have a pretty chaotic bouquet, if you will. So let's see if we can maybe crack this nut and make a little bit of money in the world's largest casino. I hope you guys are having a good one. It is a beautiful Wednesday. I appreciate you guys joining me at the crack of dawn, 9:06 in the morning. I don't even know if America's up yet. 9:06 in the morning. We are really up even before the sun. Look at us in here. A quick little pat on the back. We're just all crushing it. We're all just crushing it in here. Literal, I think we're up before the farmers, if I do say so myself. So I do appreciate you joining me so early in the day. If you haven't already, all I ask of you is to like, subscribe, turn on your notifications. All that stuff is completely free, and it truly does help me out get this video and this channel and this content in front of other people who might want to be degenerate gamblers with all of us. So I would ask if you take one quick second every day, like, subscribe, turn on, hit that bell icon, turn it to all. And with that being said, let's get rocking. Let's see what we actually have going on in the market right now. Pre-market action, a little bit bullish. We have the SPY slightly up. We have the Q slightly up. NVIDIA slightly up. Tesla slightly up. Little pre-market optimism, but overall, the price momentum is nothing. We are going sideways. Look at the 5-minute EMAs, the 10-minute EMAs, the 30-minute EMAs, perfectly sideways. Same thing on the NASDAQ, perfectly sideways, perfectly sideways. We have the shorter term, the 5 and the 10 slightly green, while the 30-minute is slightly red. Same thing on the ES. So overall, as of this moment, yes, I see in pre-market we are slightly green, but price momentum, it's best to be described honestly as neutral. Stock futures edge higher as traders await Federal Reserve's rate decision. Once again, that's coming at 2 p.m. and I'll be giving you the whole breakdown on that. But before we get to it, let's talk about some of the just global drama. Trump's call with Putin signals long road ahead to Russia-Ukraine deal. Russian leader didn't agree to a full ceasefire and presented his own demands to end the fighting. So we know we had this call yesterday between Putin and Trump, and it's a little bit confusing of if Putin was giving Trump the cold shoulder and awkwardly making him wait. Trump is saying no, he didn't. And if you look at the timelines, it's all weird. But the major point is what we got right after the call. This is from Donald Trump on his True Social account. My phone conversation today with President Putin of Russia was very good and a productive one. We agreed to an immediate ceasefire on all energy and infrastructure with an understanding that we will be working quickly to have a complete ceasefire and ultimately an end to this very horrible war between Russia and Ukraine. Excuse me. This war would never have started if I were president. Many elements of a contract of peace were discussed, including the fact that thousands of soldiers are being killed, and both President Putin and President Zelensky would like to see it end. The process is now in full force and effect, and we will, hopefully, for the sake of humanity, get the job done. There were other things that came out from this. I thought the one really interesting one was apparently they might have a hockey match. Putin used a phone call with Trump to propose staging ice hockey matches between the U.S. and Russian players, which Trump supported. So I think we're going to be getting another weird version of like miracle. I'm very surprised, but I mean, at this point, why should I be surprised about anything when I guess it's just the crazy environment that we currently live in? So maybe ice hockey is going to be ending global conflict. I guess that's the current version of the simulation that we are on. On more of a serious note, a lot of it has to do with what's going to be going on with the region. Like there's certain pieces of land that are in question of whose is it, who isn't it. Obviously, there's always the question of NATO. Is the Ukraine going to be joining? Obviously, most likely not. That's a non-starter. Golly, dude, my allergies. I think it's because the Piper's right here. Piper's chilling with us today. She wants to help us out on a Fed day, which I think is very kind of her. But anyway, that all happened yesterday. When we started to get the result of it, then Zelensky was saying, I'd like to talk to Trump. I guess Zelensky was in no way involved. And he's like, yeah, we're not going to have a deal with Ukraine if Ukraine's not at the table, which I think kind of makes sense. And then that brings us to today. Zelensky says he'll talk to Trump after Putin's phone call. So it's going down today. At some random point today, we are expecting to get an update on how their call goes. So just another thing to pay attention to. Obviously, the major thing of the day is the Fed. Investors look for the Fed's take on growth after the U.S. bond rally. So here's how it's going down. At 2 p.m., 14 o'clock, we are going to be getting the FOMC statement and the interest rate decision. That comes out at 2 p.m. And then also, I believe this time around, we're going to be getting the SEP, the Summary of Economic Projections. And if we do, well, we'll obviously be going over the dot plot, but I got to double check that. And then we know Jerome Powell will be taking the stage 30 minutes later. So we get the result at 2 p.m. and then Jerome Powell comes out at 2:30. Speaking of the results, we already know with 99% accuracy that we are not going to be getting a change to the Fed interest rate. We are currently sitting at 4.25%. There's a 99% chance right here that we're staying at 4.25%. In reality, the first jump in us maybe getting a rate cut is June, so we're not going to be getting one in May either. So don't hold your breath on that. So you might be thinking, whoa, man, if we already know that we're not getting a change to the interest rate, what gives? What's going to move the market? And that's kind of what I was alluding to earlier on of like the really like just nerdy shit happening in the market. But it does come back to the Fed's portfolio, aka the Fed's balance sheet. As debt ceiling looms, the Fed considers tweaking its portfolio runoff process of shedding assets and draining bank reserves could collide with dynamics related to raising the federal debt limit. We're in this situation that in 2019, before Rona, at that point, the Fed was trying to run down its balance sheet, and it caused some issues in the overnight lending market. And that's a huge, huge market. We're talking all the big banks, billions, if not trillions of dollars in an annual just overnight lending. It's a huge thing in the market. And then in 2019, they started to notice some issues and then like, all right, maybe we should pause this and try to figure out what's going on. But it didn't really matter because then in 2020, Rona hit and then they jacked up their portfolio anyway. And when I say they jack up their portfolio, what they're doing is buying treasuries and mortgage-backed securities. That's what the Fed likes to buy, treasuries and mortgage-backed securities. And they're doing it with just money that they're creating. And they basically go to banks and they're like, yeah, we'll buy all this stuff from you. And they're literally just creating digital cash. Like they just go to the computer and they're printing. When people say they're printing money, that's what they're referring to. They're buying these assets, the treasuries and the mortgage-backed securities, with money that they're literally in real time creating. So what that does is it helps keeps yields low because as there's demand for bonds, remember bonds and yields move inversely. So we're in this situation where things were not going well. And then all of a sudden they're like, you know what? I'm going to step in. We're going to help out. They print money out of thin air, which eventually does lead to inflation. But that's kind of a side point. And like we already all obviously know that. So anyway, at a certain point, you can't keep doing that. You can't just keep printing money and because eventually inflation is just going to get too high. So at a certain point, you have to kind of pause. And when I say pause, I'm not really referring to them running off their balance sheet, pause in terms of the purchasing. So what they do is they don't really sell. It's not like they say, okay, we have all these treasuries and mortgages on our balance sheet, so let's sell. What they do is because they're inherently bonds, they just let them mature and then they end up not reinvesting that money back in. So eventually the reserves that were built up from the bank side with all this fake money built up, eventually this is the balance sheet runoff. Basically, as these bonds mature, they say, okay, cool. And they let this calm down. So the reserves are dwindling. They let this burn off their balance sheet. And that's what they've been doing now for actually quite a while. And it's getting to this point where the reserves are dropping. And reserves, once again, are important for the overnight lending market. And we know in 2019, the last time that they tried to handle this situation, it didn't go so well. And we kind of got a breather. Depends on how you really want to refer to it. You could say they got a little bit of a breather because of what happened with Rona. So they ran it back up and basically it was an economic issue that they just didn't have to figure out at that moment in time. So it's all like I said, very convoluted, very complex. But what you really need to know is when the reserves in the banking system start to drop, there's a certain point, and the Fed does not know this point. We're dropping. And there's a certain point where there's issues in lending. That's the real TLDR. And the Fed has been kind of coming closer and closer. But all of a sudden, we now have this new issue with the federal government that we're going to have debt ceiling issues. And then all of a sudden, now it forces the Fed to make some sort of decision. As of this moment, as of the moment that we're speaking, if you listen to all the talking heads on the interwebs, the major argument here is, okay, they're going to have to pause this runoff. They're going to have to either pause it or stop it. And if we do that, if that is the statement of the day, that's going to be bad, because it shows that they know something bad is going on in the system and they don't quite know the fix for it. And they hope that this is going to be the fix. So I know we're talking about the Fed interest rate, but we already know it's going to be 4.25%. I'm telling you this. I feel with very, very high confidence that the thing majorly moving the market today is going to be any commentary with the aggression of the runoff. If they're like, you know what, we actually think it's fine and we don't care about the readings we're getting on our machines, we're going to keep running off. All right, maybe. But on the other side, if they're like, no, things are bad, we have to pause it, we might stop it indefinitely, that's going to be the conversation that the market's going to be reacting to as bullish or bearish. So I know that this is directly impacting bonds and yields, and maybe that's not the thing you guys are directly trading in the world of fixed income, but that's really where this obviously is going to be living, and it's going to have a huge secondary impact on the equities market. So I know we're talking about treasuries and bonds and yields, and you guys are like, I don't trade that anyway. Why does it matter? Well, remember that the bond market is actually a multitude larger than what we have going on in the equities market. Yes, the equities market is huge, but the bond market is monstrous in comparison. So when things go awry over there, there's going to be a giant impact in the equities market as well. So I wouldn't be sitting there right now thinking, dude, this doesn't impact me at all, because it 100% impacts you with where the equity market, the stock market, the crypto market are going today, your long-term investments, the health of our economy. This has huge impacts. And remember, we don't live in a vacuum. The BOJ, the Bank of Japan, the equivalent of our central bank, but over in Japan, they hold their rate steady, noting unease over potential tariff impacts. We know that the BOJ owns a decent amount of our debt, and then there's even some initial commentary from Trump and the administration that they literally might just run it off and we might not owe them as much money as we do. And here they are a little bit scared because they've always been in a deflationary environment with their yield curve control. So the whole thing is messy. And just remember, we do not live in a vacuum. China markets are set to outperform Wall Street as U.S. exceptionalism comes to a pause. So, okay, is it not? I don't really buy it. I think that this is just a really good headline. I think, if anything, the Chinese market is a little bit more on tilt than ours are. I'm not saying that ours is in a healthy state by any means, but I would say on a relative basis, China's closer to being tilted than we are. Regardless, that's just one stupid person's opinion. Maybe I'm right, maybe I'm wrong. But my point here is that even with, there's so much going on from what happened right before Rona to during Rona to right now, and all of that was complicated to begin with. And then when you add on this potential trade war stuff, I've said this in the past literally gazillion different update videos, but the amount of uncertainty in the overall system, and when I say the overall system, the economy, monetary policy, the stock market, the uncertainty is just ripping right now. And clearly the stock market does not like uncertainty. As soon as things get uncertain, mid-Feb is when they started talking about the trade war. Look at what happened since then. Now, will the trade war actually play out? I don't think so. I think little pieces of it will here and there, but I don't think it's going to be as dramatic as, once again, some of the lamestream media is saying. So anyway, this craziness of what's happening with a $1 trillion balance sheet from the Fed is now also going to be impacted not only by the debt ceiling, which we think is going to get messed up in August, but also this trade war. Trump policies promise an economic downturn, says prominent forecaster and first ever recession watch. Folks, I want to make it very clear. Regardless of who was president, it could have been Trump, it could have been Kamala Harris, it could have been you, it could have been me. The economy was already on the pathway, and thus the stock market was already on the pathway of taking a serious hit. Truly, regardless of who was president, it could have been my cat as president, but with the amount of money that was printed in COVID, with the amount of inflation, that put serious strain on the economy, and there's no such thing as a free lunch. So Trump there's maybe a decent argument that he's speeding it up. And that is just a game theory move. If you speed it up, that allows you more time to build a foundation and bounce of it by the time you leave as president, because everyone is pretty much remembered how they leave as president, not necessarily how they enter. So his team might have said, hey, man, we've been dealt a pretty crappy hand, and we think our best odds of ending things well for when you leave as president is to kind of speed run getting the pain out of the system right now. But I want to be very clear. We were already on this pathway. Like, I want to be very, 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 very clear about this. Whoever was president was most likely setting up for a pretty rocky end of 2025 and maybe even 2026. In the short term, like I said, I think there's pain in the system right now. I think April, potentially May, are lights out bullish. And I think as we get to the end of this year, things might get rocky. And I do think 2026, once again, regardless of who's in control, was setting up to be a very, very rocky time period just because of how much money's putting in the system. And it's time to, what's the saying, pay the piper. I think that's truly where we're at. So with it, lots of uncertainty. Maybe some of the uncertainty is going to be cleared up today, but just because we clear up uncertainty doesn't necessarily mean it's bullish. Because if the way Jerome Powell chooses to clear up uncertainty by saying, yes, we have to pause the balance sheet runoff, holy guacamole, Batman, it's going to be a crazy, crazy day. Don't forget, sign up for the newsletter. All this stuff, I like to break down the previous week, what to look forward to in the upcoming week. I give you some of the earnings that I think you're going to care the most about, all the major macroeconomic events. My entire goal with this is just to give you a little cheat sheet that's, once again, 100% free of the major things you should be watching. So, for example, today, 2 p.m., FOMC interest rate decision, 2:30, Fed Chair Powell press conference. So, of course, we will be streaming that. I'll see you back here at 1:45 today. We're going to be doing 2 streams. Tomorrow, we have the Philadelphia Fed manufacturing and normal initial jobless claims. Nothing scheduled for Friday in terms of macroeconomic reports, but I do want to remind you that Friday is not only the monthly OPEX, it's actually the quarterly OPEX, which means that it's going to be a quad witching day. So quad witching this Friday, March 21st, you're going to have a lot of contracts in the index, like in the stock market and the futures market, equities, indices, all expiring. So it's going to be a big rotational period. Also, side note, if you're trading futures, you should probably update the contract you're trading on. If you trade ES or NQ, it's probably time to roll over to the next one. Just a little quick side note there. I should also remind you of today, it's not really a macroeconomic data drop, but volatility expires today. For whatever reason, the vol contracts, I'm talking about something directly like the VIX, they expire the Wednesday before. So even though we have the monthly OPEX this Friday, volatility contracts will be expiring today, which will probably make the morning session a little bit crazier than normal. And I know that's an insane thing to say on an FOMC day, but for whatever reason, the market gods thought it would be funny for us to not only have a giant, hugely important FOMC meeting on the same day that volatility is expiring, 2 days before a quadruple witching monthly quarterly OPEX, the week before we have a giant JP Morgan position expiring as well. So they just thought it'd be fun. They're like, what if we turn like the insanity from a 10 and we just snap the knob off and turn it up to 11? That's pretty much the situation we're in right now. It was just the market gods. They were up there. They were laughing. They were having a couple brewskis and they had just a couple cups of insanity and they just kept shaking it in. And we're like, yeah, that's exactly how we're going to go today. So buckle up for all that. Very quick side note. I know we're talking about the overall market, but NVIDIA did have some interesting announcements yesterday. NVIDIA announces Blackwell Ultra and Rubin AI chips. So they had a big AI conference yesterday. At first, it was kind of positive. Then people responded negative, but you could see now in pre-market trading that it is getting a bit more positive. I thought the coolest thing is that the world of tacos are now really being met with AI. Taco Bell parent Yum Brands partners with NVIDIA to speed up its use of AI. There are many things in this world that I was like, man, AI would help that out. The medical field, the trading field, just everything. Like what could AI not improve? And then I thought to myself, the field that it's going to improve the most is tacos. Tacos are the field that like the one field that needs to be completely revolutionized is what's going on with my Crunchwrap Supreme. I need AI to come in and make a better Crunchwrap Supreme. So I am more than pleased to announce to all of you that we're finally going to get it. Yeah, we can improve documents, money supply, solve cancer. Of course, there's always phenomenal things that AI could be used for. But I think we could all sit here and agree, politics aside, that the one thing we really need to optimize in this world is just tacos, dude. tacos need to be taken to the next level. And I'm so happy that finally, just finally, AI is going to be used exactly what it was meant to be used for. So very happy to report all of that. So it's a good day to be a taco. It's a good day to be a giant supporter of the taco industry. So very happy about that. Now, bringing it back today, let's get into the more of the nitty gritty of the situation. Right now, price momentum is neutral. That's the first thing we check. 5 minute, 10 minute, 30 minute, little red, little green, little red. If you look at the NASDAQ, little green, little red. So price momentum right now, zilch. So that's just kind of how we're setting up for the day. Right now, we are scheduled, if we were to open at this exact moment, we would be opening up slightly above yesterday's close, which right out of the gate gives us an interesting trading opportunity. As always, I mark out the previous day high, low, and close. Very important. That's the green, the red, and the white, respectively. As of now, if we were to open, it would be what value? Let me just quickly reload this. It looks like 5627. So roughly right where my cursor is, just above this giant charm level that we had yesterday, a key open interest level. We're scheduled to open here, as in we're scheduled to open at an important level. So yeah, it might act as support. If we quickly fall below it, it might just kind of, I don't know, offer a little bit of a dive off point to hit yesterday's close. So we're opening roughly in this range, which means, okay, if we find support here, easy pump up to the key open interest level of 5650 and also yesterday's high of 5654. This would be my first bull case target. If you're bullish today, if you see us hold this level and things are looking good, okay, you could play that up there. On the flip side, if this fails, obviously we're watching 5600, key technical level, key psychological level, key bounce level of yesterday. This would be my first bearish target. So kind of a chop zone where we're going to open first bullish target, first bearish target. But I want to clarify, within these first targets, this overall zone is a giant chop zone. I wouldn't argue that we really even have a bullish situation sentiment until we're above 5,650 or a bear sentiment until we're below 5,600. So yes, those could be used as your first targets for little scout plays, but overall, I think it's bullish above here and I think it's bearish below here. And really, this is a bunch of chop and we just have to wait to see if we're going to get momentum in one direction or another. Obviously, above this, my target would be 5,700. And if we start to break below, I'd be watching somewhere between probably 5,560 because I'm expecting higher vol today, or implied volatility, I should say. And if that doesn't hold, then I'm watching all the way down here at 5,500. Truly, right now, coming into the day, based on price momentum, I'm very neutral. Based on the option chain, I'm a slightly bearish. And coming into today, just to be transparent with all of you, I do have puts, but that's just because the option chain for the remainder of the week, Wednesday, Thursday, Friday, is put dominated with negative gamma. So put dominated, obviously favoring the bears. Negative gamma just means expect large ranges. Remember, negative gamma, positive gamma, not bullish, not bearish. It just means expect large ranges, while positive gamma is more of a mean reverting environment. The gamma situation could easily change, though, as soon as we actually get the system of, like, I guess, vol expiring. So we're going to be kind of coming back to this right here just to check the setup right after market opens. So feel free to screenshot these levels if you are interested in the levels I'm watching. Of course, we're going to be streaming extra today, so I will, we're going to be back here this afternoon, so I'll happily re-show you what we have. We might have to redraw some of these based on the options flow throughout the day. So this is just kind of how we're starting off on the day. But I do want to remind you, taking a step back, overall, this is clearly a bearish trend. We have lower highs, we have lower lows. Officially, as of Monday of this week, the 17th, we did put in the first clear lower high, breaking down yesterday. At this point, if we keep puking, we might be talking about 550, or on the flip side, if we break, maybe it does get legitimately bullish above 570. So that would be the larger time frame bull case versus bear case. But of course, we'll be coming back to that. Right now, it is a crazy high volatility, high octane FOMC day. For me personally, I have actually found that it's better to not really do much on these days. Sometimes I get absurdly lucky, sometimes I get absurdly unlucky, and by the time it all just, I guess, nets out in terms of my emotional state, it's just not necessarily worth it to trade these days. So I'm probably not going to be doing any zero DTE day trades. Of course, I have swing positions that I might have to monitor, I might have to manage. I might do my futures trade early this morning just to get it in and out, because you have to trade X amount of days. But beyond that, I don't think I'm really going to be slinging some zero DTE positions, especially before the 2 p.m. announcement. I just think at that point you have pretty much 50-50 odds. So what's the point of it? So I just wanted to share my thoughts. Obviously, I'm not your mom. Do what you want to do. If you have a profitable system, I highly recommend you stick to it. But I just wanted to share my thoughts on the whole situation. And with that being said, Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. All right, let's see how we're setting up today. Definitely not doing anything out of the gate. I will be doing everything to, like I said, these are the initial levels I'll be watching. We have a little bit of support here. My first target, bull target, would be up there. My first bear target, probably the close from yesterday, but more so 5,600. We're going to be right here. Let me switch to the 5 second just so you can see the options flow. We'll come back to this in a couple minutes just to see how the option players are positioning. Looks like out of the gate, slight green in the tech sector. Nvidia's looking good. Tesla's getting a little bit hit. I'm seeing more so green over here, but it's way too early to be doing anything. I truly believe you have no advantage trading this early in the day, especially as a day trader. Just wait to see what type of trend is actually being created. We'll be coming back to momentum. Momentum actually just got a nice little pop, potentially favoring the bull camp. But once again, we're not even 2 minutes into the day. So let's just take a little bit of a breather, just kind of wait to see how things are actually going to be playing out. More than happy to continually come back to this and just see which way things are or aren't trading. I saw a couple questions about this. What's going on with Captain Condor? Captain Condor is not playing today. I see no major Captain Condor position, which probably makes sense. They're probably not really wanting to risk some massive amount of money on potentially just a binary event. So Captain Condor does not seem to be in the game today, just waiting for this just a crazy event to probably exit the system. So I wanted to share that. We'll come back to price momentum right now. The shorter time frame is definitely slightly favoring the bulls. But what I'm looking for is how does the market react to 5625 and how does the market react to 5650? Those are going to be my first two watches. Very quickly, as the market is opening, shout out to Take Profit Trader. Just to show you guys, I have not traded. Nope, not this one. I haven't traded on any of these accounts yet. Right here, just kind of showing you where I'm at with every. Oops, that's not the right one. That's the right one. Right here, just no trade yet. Everything is completely zero, zilch, nada, goose egg. So I just wanted to show you, I have my 20 Apex accounts and I have my 5 Take Profit accounts. Right now, no trades, just waiting to see if I see some good opportunity today. Right now, in real time, if you're trying to buy one of these sim to funded accounts, right now, Take Profit is the best deal. You could use the code Goonie to get 30% off for life and no activation fee. The fact that it has no activation fee is why it is currently the best offering. The reason we're talking about it again, I know we spoke about it yesterday. Some people had some technical issues, and I just got an email late last night from the team that all their technical issues are resolved. So you should be pretty much good to go. So once again, I know we spoke about them yesterday. Take Profit right now. This is currently the best offering. Use that code Goonie to get 30% off for life and no activation fee. Right now in real time, this is the best offering in terms of just like the most affordable offering. So I want to let you guys know that. Pinned to the top of chat in the description of the video. VIX expired yesterday. No, it technically expires today. That's not right, Profit. It expires on Wednesdays. I think it's like a strange early expiration though. Which means corresponding VIX months were moved to two. Wait, hang on. VIX expired yesterday. 418 was a holiday. Good Friday. So SPX monthlies were moved to Thursday, 417, which means corresponding VIX monthlies were moved to. Are you sure about that? Which means I don't think that's right, Profit. I could see them moving next month because of the holiday, but they wouldn't move it the month before. You very much want to check that. I like if there's a holiday next month, that makes sense, but they wouldn't move the month before. They would just add an extra day on the next contracts or remove an extra day. But I don't think that's how it works. I could double check them. VIX March expiration. What is today? 2024. Yeah, this is saying it's expiring today. I'm looking at the calendar. Oh wait, hang on. We're in the year 2025, right? Sorry, I'm looking at this. March 18th, 2025, Tuesday, due to good. Are you and I looking at the same website? Macro option. March 18th, what is today? The 19th, Tuesday, due to Good Friday, holiday on April 18th. But does that change? I'm confused. Does it change the equities one, because obviously the equity, it's not going to change the equities one. Irregular weekly options, June 3rd, Tuesday, due to Friday the 4th. That doesn't impact us up on this one. March 18th for VIX. Okay, so it impacts the VIX, but not the equities, is what I'm seeing from at least this first website. I'm hoping that this is right. Expiration dates are the same for VIX futures, both regular and mini. It is always 30 days before the S&P 500 option expiration, usually 30 days before. Okay, so this one expired last night, but the SPX is still the same. So once again, if this website is right, what I'm learning is, or I guess what this is saying is that SPX will remain normal, and because that one's remaining normal, they have to like kind of readjust VIX. Which, if yesterday night, if that expired, why did we have such a boring day yesterday? You would think that with a VIX expiration that we'd have a little bit more fun in the sun, but this seems to be a little bit of a potential like Easter thing, Good Friday, just like a holiday, and changing an expiration out in April, it looks like. But still quad witching this Friday, which is going to be a much more important event. So still quad witching 4 major types of contracts between indices, stocks, and futures, all expiring once again this Friday. Market taking a tiny bit of a hit. Like we had a tiny bit of a pump, tiny bit of a hit. The tech sector taking a little bit more of a hit. Pay attention to VIX throughout the day. Pay attention to see if it gets above 22 or 23 or below 21 or below 20. So watch to see if VIX is going up or down. Definitely an important one. But for the meantime, I'll have NVIDIA and Tesla up just because I know there's more interest in it. Right here, here's a look at the Mag 7. We pumped until about 934 and we're drifting down. The NASDAQ drifting down clearly, taking a hit at 933, NASDAQ taking more of a hit. And I would say the most influential one is the S&P 500 complex, pumped up until about 931, try to recover around 933. And it seems like everything in the options market, and thus what we're seeing in price action, taking a hit about 3 to 4 minutes into the day. Around between 933 and 934 is where we're just seeing options turn clearly. So we started off a little bit strong, and then that was quickly lost. But with that, we're still not at any key levels. We're coming up to my first test level of 5625. We just do see some decent open interest there, so I'll be watching that. If you're playing this, obviously we know there's very high odds to hitting the previous day's closing value, which in this case would be 5614.65. So if you're playing this and you don't think that this is going to hold, or if it's looking weak, I think this would be a pretty reasonable target, especially if you're like scalp trading or something like that. For me, what time it is 9:37. Do I have mine ready? Okay, I have this. All right, let's prep up here, Tonto. So it's not really my style because you're using pre-market stuff, but that wasn't the worst trade here. This little trend line breakdown. Once again, not my style by any means, just because I care a lot more about the action from market open until now. But it is always interesting to see pre-market highs and pre-market lows, which my attention is immediately brought to 19,660, the low that we saw around 345, it looks like. And then obviously I just have, this is just VWAP, this dotted dashed white line. That's just VWAP, and looks like we're finding a little bit of support right there. So it'll be interesting to see if this ends up breaking down below VWAP if we just take out this recent low, because that would be a VWAP failure, getting rejected off this EMA. What else do we see? Yeah, bouncing off of VWAP. And let me fix this. All right, clearly I've made no trades yet today. The goal, if everything were to go to according to plan, my day would look like this. My day would be a quick little early morning trade that I crush, make about $1,000 per account. I lock that in and I turn off the program. And then later on the day, just hopefully in profit, I get to successfully manage my swing options. I really do not have any particular interest in trading futures a lot today. I really don't have any particular interest in doing 0 DTE trades. I want to do my 1 futures trade this morning, and then I just want to ideally manage my swing trades in massive profit. That's if things were to go to plan. That's how like my day would look. So let's see if it actually does go that way. Here's the Mag 7, pumped a little bit, giving it back, but the Mag 7 just hit a new delta high. The NASDAQ is not recovering, just got crushed and now going flat. The S&P 500 try to pop a little bit, but seemingly failing about 10 minutes into the day. So let's just give this I don't know. It's interesting that the NASDAQ is so weak. The Mag 7 was looking weak and then just got a pump right there. But then the SPY is a little bit more bearish than anything else. If you look at the 5-minute and the 10-minute, those are more bullish. The 30-minute is trying to go bullish as well. The NASDAQ is a bit weaker. Yes, the 5-minute and the 10-minute are bullish, but they're kind of testing right now, while the 30-minute tried to get going and was seemingly smacked. So a little bit of indecisiveness in price momentum. I would say in terms of price momentum that, yes, the bulls currently have the upper hand, but the options market is maybe not really suggestive of it. The Mag 7's looking good. The NASDAQ doesn't look so good, while the SPY also now doesn't look so good. So I wonder... We're only 10 minutes into the day. I wonder if we're going to end up breaking this high or this low. That might be an interesting play. It's kind of our overall situation at the moment. We pumped for about 3 minutes. Then we saw the options turn. And actually now in real time, the SPY might be turning a little bit more. But the Mag 7 is strong. What is happening in the Mag 7? It's calls being purchased and puts being closed. It's the double doozy. While the NASDAQ looks like crap, and then if you bring it over to the SPY, the calls are completely flat. Calls were bought out of the gate, and since then, no one's touched it. But starting at 9:33, people are buying puts. So the call buying on the SPY completely stalled out. Potential fail at VWAP here. Maybe we're at VWAP. Do I like this? Yes, no, maybe so. Yes, no, maybe so. Well, a little bit late now. Here, I'm bringing up this flow on my other side. Bringing up the flow on this other side. I want to see how big this first bounce is whenever we get this first bounce. That's kind of, I almost took that trade, and obviously it would have worked out beautifully. So I'm a little upset about that because I pretty much could have been done on the day. But because I am trading a little bit more aggressively to try to build up the buffer in all of these accounts, maybe I should just be a bit more patient instead of the whole woulda, coulda, shoulda. Maybe just like a little bit more certainty in what I am doing. But I'm also trying to be mindful of the fact that yesterday the movement was until 10, and then after that we got nothing. Dude, I would have been done if I just took that trade. I would have been completely done. Yeah, classic VWAP failure. I'm going to be looking for a bounce back up to VWAP that fails, and maybe I could just get in. I just don't want to chase it right now because it'd be too much risk, especially if I plan on trading multiple contracts. So you could have taken that. It's a little ballsy because it could have been a fake out and a bounce, which is like what was in my head. I was more so trying to wait for that A+ setup instead of just like a good setup. So I guess if the market goes without me, that's a bummer because I could have been up. I could have been done. I could have locked in my 25,000 and I would have been able to move on with my life. But hey, you never know what the next bar is going to be. The SPY options. Here, let me switch it over to this. First, the Mag 7. It is now dipping on that puke. The NASDAQ just hit a low and we're bouncing off of it, while the SPY, we are puking. So options clearly favoring the bears as of right now. The 5-minute and the 10-minute cracking red, also with the 30-minute, 5-minute, 10-minute, 30-minute. So this very neutral, somewhat confusing price action currently favoring, and we still have some distance to go. So we're at this support at 5625. This is the first major support. So maybe buyers step in here, but if they don't, pretty what I would consider an easy play down to 5614, which is yesterday's closing value. But I cannot enter because I don't have a good risk point. Right now, my risk point is all the way up here. So I just don't like the risk reward. I would say the bearish momentum is a solid one, but we're not, in my opinion, really seeing an opportunity I could play off of. So I just need to be a bit more patient, which for me on this newest chapter of, I guess, what are we even going to call it? The newest chapter of this futures trading, I just need to be as disciplined as I possibly can, because inherently it was my lack of discipline that really got me punished the first time around. So On this particular time, I'm going to do everything in my power to be absurdly disciplined, which is, yeah, of course, I'm kicking myself right now because I could have taken that play. I already would have been done, but I just need to play a bit better, need to be a better trader, need to have a bit more discipline, need to be a bit more realistic, and that is just life. That is just, maybe we'll get a little bounce up here. Yeah, we're singing. Okay, we're coming right back up to VWAP, it looks like, right at 19,750. So maybe this is playing out the way it needs to. Maybe making the right discipline decision is the right decision. Mag 7, not looking the best. The options market is not buying this pump. The NASDAQ, same thing. We pumped a little bit, but seemingly giving it back. And then the SPY is actually looking a bit stronger. So what I'm looking for right now is a failure in this options bounce. What do we have going on? Some 0DTs being closed out, locking in their profits, and a little bit of 0DT call buying is what I'm seeing here. But I'm 100% looking for the options to turn and then price to turn, and then I'll take my shot at it, and hopefully patience will pay. Oh, whoa, what the hell just happened? 9:45. Did we get something had to come out just now? Happy I wasn't in the trade. That would have fucked me over. That would have really screwed me over. What was that? This was I don't think there had to be profit. Do you know what this was? You usually. Trump administration eyeing major cuts to funding domestic HIV. No, that's not it. That wouldn't do it. Trump-Zelensky call scheduled in the next 30 minutes, according to the White House. So maybe we have a bit of news there. Things are already getting a little saucy. I mean, look at this. Just ripped it back up. That's crazy. That is crazy. Yeah, that was a large rippity-skippity doodah back to the upside. That play would have worked. We recovered. I was trying to wait to get into lower risk. Very happy I paused it because randomly at 9:46, just a huge pop. It sounds like it has something to do with the chit chat between Zelensky and Trump. So I guess they're going to have the call in 30 minutes. But if it's anything like yesterday, it's going to take forever for us to find anything out about it. Here's a look at the options flow. Right there, calls just bought right here. You could see it exactly at 9:46, just the delta ripped, which it could just be a player. It doesn't necessarily have to relay. Maybe the player is playing it off of the Zelensky Trump thing. But I see something specifically in Mag 7 popping. Was it Apple? Not really. Was it Microsoft? Microsoft's been looking good today. Nvidia got a pretty large bullish pop right there. What else do we have? Tesla got it. So Nvidia and Tesla both got a pop at 9:46. Google got a pop too. Amazon got a pop too. So did everything just get a pop right there? Whatever happened at 9:46, someone really splashed the options market with a bit of bullish aggression. SPY new intraday high, but the Qs have not achieved that yet. We almost broke down and then quickly got saved. Almost broke down, quickly got saved. So that was a little bit of reversal. We're already seeing some, I guess, just crazy FOMC choppiness, if you will. We're already seeing some of the craziness. All the crazies are already coming out. The VIX is still holding 21. Even though Nvidia got a bit of a pop, not much. Same thing with Tesla. We got a bit of a pop, but we're seeing the non-tech sectors do well today. Is it energy? Energy, new intraday high. Financials, new intraday high. Utilities, not doing much. Industrials, new intraday high. Healthcare, not doing much. Real estate, not doing much. Consumer staples, not much. Consumer discretionary, looking more bullish. But energy and financials are leading the charge to the upside as right now, while a lot of other sectors are just basically choppy. Basically choppy. All right. We'll do this. Here's a quick look at the flow since then. NASDAQ, got a bit of a pop, but overall a little bit suspect still. The Mag 7, we saw a lot of the most popular tech names get a, right here, just 9:46. Someone really splashed the pot. And then the S&P 500 was bearish, bearish, bearish up until 944. And then we actually got a pop large enough that we got a new intraday high on the SPY, but not on the Qs. And right here, bounced surprisingly right off a key options interest level at 5625. This is why we mark out the levels, because it's the levels we're looking for reaction. Tipped below it just for a second, and then basically a minute and a half later, just completely ripped. If this keeps going, natural target is up here, 5650. This is also a huge open interest level, a massive open interest level. So don't be surprised if we were to get up to there or somewhere really in this 4-point region, if there's a bit of a smack. But it seems like this pop potentially already losing a little bit of its enthusiasm. Options are no longer following through. We got the SPY pop, but now options are flat. And the NASDAQ had a lot of calls bought, a lot of puts closed, but even that seems to have stopped at 950 here. Tesla taking a hit. Tesla in the bottom right. Where is VWAP? VWAP is down here at 52. Oh, is this breakdown worth it to take? If you take this breakdown trade, you're in at 66, you're risking 80. So that's a 34 point risk. That's $600 per contract. If you're trading multiple contracts, obviously you would just scale that up. Is this breakdown worthwhile to take? You have well-defined risk. The NASDAQ does look weak. But the other side of the argument is the SPY actually looks a bit stronger. The SPY did make the intraday high while the Qs didn't. So if you want to be bullish, you might want to focus on the SPY. If you want to be bearish, you might want to focus on the Qs just because of the relative strength comparison of the intraday movement. Obviously, on the day, the Qs are up more, but just the fact that the SPY was able to pump to a new intraday high while the Qs weren't. So we just got into this period of chop. I'm curious if we're going to pump above and take out 477, or if we're going to get smacked below and take out 476.30. So I'm kind of watching that. Also on the SPY, are we going to get above 463.50, or are we going to get knocked below, 563.50, or knocked below 563 flat? Tesla definitely showing some weakness. Vol is actually coming down, which should be more bullish, but watch to see if there's any spikes in it. Bitcoin chilling at 84. Palantir spiked, coming down. Tesla looks like it's getting cracked. Nvidia bouncing a little bit, not really doing anything. Broadcom actually trying to recover. Netflix trying to recover. Meta trying to recover. MSTR is actually looking pretty good. Microsoft looking pretty good. Apple looking really good. Coin looking really good. ASML not looking so hot. RUM looking pretty good. Amazon flat. DJT flat. Qualcomm flat. Google trying to recover. Ripple's up 10%. Solana's up 4%. You have Texas Roadhouse. Bonds are coming down. So yields are going up right now. Yields are going up. All right. We have an intraday breakout here playing out on the SPY and the Qs. How's the flow look? Little pop there in the NASDAQ. The Mag 7 trending up. The SPY is now also trending up. Green, 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 green. What's this risk? All right, so the breakout trade was at 98. Breakout trade at 98. This was a potential interesting play right here. That entry, very reasonable play. And yeah, that was, oh, what am I doing? What am I doing? Do I want to take this trade? Do I want to take this trade? Coming right up to that. Maybe I wait to see if it pulls back first. Bullish, 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 bullish. Mag 7, new delta high. NASDAQ curling up. SPY, new delta high as well. We're taking out the low from 2 days ago on the Qs, coming up to this first resistance level. I don't necessarily want to chase it after this. I mean, it would have been one thing to go long back here at 805, but to chase it by 25 points doesn't seem like the most logical. I kind of wish I just took that right away. Because once again, not only would this one have already worked, this one now would have already worked. No, I would still be in the final position, to be fair. So I can't, one of my two would be locked in. Let's give it a second. I don't need to rush it. I do have PTSD from the recent FOMC days, so I definitely don't want to be chasing a breakout. That's a great way to get your face absolutely kicked in. Great way to get your face absolutely kicked in, especially because we're running up to resistance right now. I don't want to buy just below resistance. If you took this breakout at 952, that was a phenomenal trade. We pumped, we consolidated, we started a break. You get to ride it up here, well-defined risk. You had to be quick to enter that one though, but entering at 952 long, playing it up to here, you had minimal risk. The reward is already paying itself off. That was a good trade. TLT is getting hit. Tesla's also getting hit. Nvidia is trying to bounce. Huh. Interesting. Tesla's still green on the day. Actually, most things are green on the day except for vol. Vol is coming down right now. What a turnaround. Just someone, we went from clearly being bearish, and then at 946, someone just flipped it. Like, nope. And they just completely splashed the pot with obviously quite a bit of money. And it just popped, and it settled for a little bit, and then more bulls came in, and you could see the follow through here on options. I mean, the Mag 7 pushed all the way up to 954. You have the NASDAQ. That also pushed. This also pushed. Jesus. I want to see, at this point, if the options chain for the day, the 0DT is still put dominated. Let me check this out. I'm loading up one program real quick. You can see this is the current open interest. So you have big calls at 5750, another node at 5,700, and we're at this node right now. If this breaks, yeah, we're talking 5685 maybe is the next target. If it gets smacked, we're talking back down to 5,600. These are just, once again, the 0DT open interest levels. The highest open interest change of the day is at 5,750. Right here, I see a node at 5,700. I see a node all the way down here at 5,500. So that's a crazy expected move. That is just the volume. That isn't really showing the most right now. A lot of sold calls at 5,760. Long calls at 5,705. That might be part of a condor thing. But not much in here. I guess people are just shooting for the extremes today. They're definitely shooting for the extremes. All right, looks like the craziness has calmed down a little bit, but overall, starting at 946, that was a nice trend to the upside. But right here, I'm wondering which way. So we got another big pop at 956. I'm wondering if we're going to get a change of the hour, smack. I wonder. Right now, price momentum clearly bullish. Green, 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 green. So price momentum bullish, price action. Ever since 945, we have higher highs and higher lows. So price action bullish, price momentum bullish. And as of most recent, SPY is now turning, aggressively turning. People are starting to buy puts at this resistance. Right now, in real time, we shot up to this open interest level, and you could see 0DT puts are being purchased and 0DT calls are being locked in. Will that trend continue? Your guess is as good as mine, but surprise, surprise, which you shouldn't be surprised, we are clearly running into a bit of an issue right at this very, very important resistance level, and you can actually see how the options market is playing it. The Mag 7, not reacting that much. Some people got calls for Friday. The puts are flat, but you could see it directly on the S&P 500. Puts being purchased, calls being sold. If they stop doing this, yeah, of course it might turn back around. But right when we got to that level, the first touch of it, 5649 and change is exactly where people bought those puts and unloaded those calls. It's almost as if option levels are very, very important and we should all be watching them. Why is 5650 important? Because that's where huge amounts of open interest are. That's the strike price that a lot of people are playing. You should always, always, always know where the big money's at. And right now, there's a large amount of money playing the 5650 strike. Thus, because they're playing that, you're going to have a natural reaction there. People are going to lock in their money. They're going to create new positions. But this is day in and day out. If you don't know where the big money's at, as in the strikes are playing, you're so far behind everyone else. So, like, I don't even know. I guess I would find it very, very difficult for people to have a profitable time trading, not knowing where the big money is situated. You have to know where the big money is situated. And right here, that's all these yellow lines. That's all the big money positions. As in, there's just a lot of open interest. There's a lot of delta and gamma at all these levels. 5625, that's exactly where we bounce. 5650, that's exactly where we got rejected. If we break out and rip, yeah, we're talking 5,700. If we get smacked, we're talking about a trip down to 5625. Never be married to the bullish or bearish side. Of course, you could have a bias based on momentum, based on option trend. Maybe you're like, okay, I'm trying to play this trend. But in reality, it's just a game of you have the bull case and you have the bear case. And this one's going to be big because, as I was explaining at the start of the show, this entire region between 5,650 and 5,600 is a giant chop region. So if we get above 50 and actually hold this, that's actually legitimately bullish in the short term. And I would be pretty confident about a push up to here. Now, on the flip side, I think this is going to be hard to break. So we might just very easily get smacked down back to another one of these key levels. But if this breaks out, not only are we it's cool that we're just at another bullish target, but this is potentially a legitimate, actual bullish breakout in the shorter term time horizon. Obviously, the medium term time horizon right now is clearly bearish. So that's what happens when you have a put dominated change with lower highs and lower lows. But we're seeing how this is playing out. The Q's got going there. Damn, I wonder if I should have taken that at 10. I was worried about a 10 a.m. reversal because anecdotally, it seems like we've been having a lot of 10 a.m. reversals. I don't have the exact stats on it or anything, but it just seems like out of a lot of the shows of us chit-chatting here, that just 10 a.m. hits and it's like 10:02, 10:05, something like that. And that's just like the pivot point of the day. What account type did you get for Apex? Wealth Chart, Rhythmic, or Tradeovate? And are you using Ninja 8 platform to clone your trades? I always use Rhythmic. I've never changed it. And Ninja, the platform to clone my trades? No, I have Apex Trade Copier. I didn't even know Ninja 8 platform has its own cloning. Tesla getting hit again. I mean, I haven't changed it. It's the stuff that I've always used. So if for the entire year, I've been using the Rhythmic accounts and the Apex Trade Copier. So if you've seen any of this stuff in the past year and a half, I haven't switched it. I use Ninja 8 as the trading platform. I use Rhythmic as the data source, and I use Apex Trade Copier as the trade copier. Tesla looking, I mean, the bulls on Tesla have to be punching the air right now because the SPY and the Qs are ripping and Tesla's going completely the opposite way. Brutal time to be a Tesla bull. Brutal time to be a Tesla bull. I mean, SPY, it's the exact opposite. The SPY and the Qs are at intraday highs and Tesla is just getting hit. Obviously, it's green on the day. It is up a decent percent. It's up almost $5, 2%. But Jesus, it was at 234, smacked down $4. And that's just brutal to watch as you see everything else just ripping. All right. Is the S&P 500 actually going to get a breakout? Yes, no, maybe so. Yes, no, maybe so. All right. What am I watching here? All right, that was such a trade, this trend line breakout. Damn, I was really thinking about going long at 805, and it would have worked out beautifully. Would have worked out beautifully. But coulda, woulda, shoulda. That's the life of trading. We all have hindsight bias. We all have 20/20 hindsight. Now I'm just watching if it can actually keep ripping up this steep trend line here. We're coming up to yesterday's high. Remember, when you take out the high, maybe you don't want to include FOMC days because it is such a crazy day. But when you take out the high, you do have a 77% chance of closing above the previous day's close value. So something to consider, but we're looking somewhat decent. I'm just wondering if the options market has enough to follow through. We're not getting the follow through on the S&P 500. We hit a new high, but Delta didn't. We hit a new high, but the Delta did not. So a little bit of divergence between price and the options flow. The 0 DTE has really gone flat here. So buying at resistance is legitimately a stupid thing to do. It is a very, very dumb thing to do. Going long at resistance is idiotic. You're basically just saying it has to break, because if you're wrong, you're inherently taking on the most risk. If you're buying at the high of the day at resistance, you're just asking for problems. You really are. It would have been one thing to go long at 952. It would have been one thing to go long at 10, just because you had well-defined, very close by risk. But just to do it now, inherently, you have the max risk and you're buying at resistance. It's just a poor way to trade. A very poor way to trade. I was going to say in my opinion, but I think literally just basic math would tell you you shouldn't be doing that. Basic math. Tesla trying to turn around. Here's a look at the options flow. Mag 7 long and strong ever since that switch at 946. NASDAQ popped. All right. And then what do we have going on here? SPY. Okay, it did just pop to barely a new delta high. Not on the 0 DT, but on the all expiration, we did get a new delta high reading just now. So I guess the divergence is over, but it is currently battling it out at the high value from yesterday. 5654.53, and the SPY is almost there. Remember, the SPY is created to track the SPX, but the SPX is the true theoretical index, while SPY is an ETF created, and there's a little bit of a differential and a lag because the SPY actually has the things within it, the actual indices, or the actual equity. So there's transaction costs, there's sometimes slight time delays between the actual purchasing and the selling. So SPX is the true theoretical index. So it is theoretically perfect because it doesn't have any ownings, like it doesn't have anything actually in it. They don't have to worry about buying and selling or anything like that. But the SPY, that's just like the difference. That's why you could see this of like, oh, we already took it out while the SPY is just at it. So like, I mean, they're going to be, of course, like correlated perfectly, but when you see those little nuances of why is one at a high while the other one has a little bit more to go, I totally understand. You might be thinking, oh no, wait, that doesn't make sense. I think we should honestly just like they should be hitting the new high at the exact same moment. And in a theoretically perfect world, they would, if there was no time delay in SPY's purchasing, if there was no transaction fees or anything like that, it would be exactly the same. But there's just a little bit of a difference. All right, I want to see if this can actually hold. I don't count this as a breakout yet, but we're about to be in the legitimate bull case if it can hold. I'm just wondering if this is a bit of a fake out, and a telltale sign will be on the next drawdown. Do we break 5646? If we break this low, that's a better sign that this is a fake out. If we come down and still put in this pattern of higher highs and higher lows, okay, yeah, we legitimately might be holding it. So I'm kind of watching this recent swing low at 959. I understand we're at the key options level. We're at the key high from yesterday. This is an important zone. I have no prediction, and I don't think anyone should have a prediction of does it hold and rip or does it break and fall. You might be hopeful based on whatever your position is, or you might be fearful based on what your position is. But I've seen and come across no model in this entire world or no person who can continuously accurately predict, do we break a resistance or do we get smacked at resistance? And the reason you can't predict it is because breaking or getting smacked is dependent on trades that are about to happen, on people who literally have to execute trades. So unless you know what they're about to do, are they going to be net buyers? Are they going to be net sellers? Are they going to be aggressive, not that aggressive? Are they strong hands? Are they weak hands? You don't know. So inherently, the definition of breaking or not is dependent on people who are about to trade algorithms, hedge funds, insurance, other retail traders. So unless you literally know what they're all about to do, like in real time, then you cannot properly predict. Like it'll just be a 50-50 guess. It'll truly just be a 50-50 guess. So momentum, nope, that is not a good way to predict it, especially at key levels. I don't know who teaches people this, but that is not right. When you come to key levels, you have a 50-50 odds of momentum doesn't tell you because, of course, by definition, when you go up to resistance, you have bullish momentum. By definition, when you go down to support, you have bearish momentum. That's the only way to trade up. That's the only way to trade down. By definition, you would have that momentum. So that is in no way helpful because we know at resistance, you can break or you can get smacked. But yet in all those scenarios, it has positive bullish momentum. The only way to trade up to resistance by the definition that you're trading up is momentum. Like you can't trade up to resistance and have bearish momentum. That doesn't make sense. And the opposite is also true. You can't trade down to support and have bullish momentum. That's like a mutually exclusive definition of what momentum is. So based on momentum, no, it doesn't tell you shit about a breakout because the only way to get to resistance is to have bullish positive momentum. So no, momentum would not be the indicator telling you if you're going to break out or not, especially because momentum is computed. If you look at the actual definition of momentum, it's based on what has happened, like the recent bars. It's not a leading indicator. It's not telling you what's about to happen. Same thing with EMA, same thing with Keltner-Chandler, Bollinger Bands. None of these are being computed on things about to happen because it doesn't know the incoming data. It's just a piece of it's the data and the computation of all these EMA, RSI, Keltner, Bollinger Band, stochastics. It's all on the past data. It's all on everything that just happened. Same thing with momentum. It's all on the recent data, not the future data. And I don't mean the futures market. I mean the data that we just don't know yet. What do we have here? Even though price momentum, price action, price momentum, whatever, obviously I can see ever since 9:45, we went from bearish to clearly bullish. What I can see right now is they don't know what the fuck's going on. So from market open till this exact moment, the average call strike being played has been dropping and the average put strike being played has been increasing. So you're kind of getting, in the options market, you're getting its own pennant. Lower and lower call strikes, higher and higher put strikes, converging seemingly around 5,675 is like, it's kind of actually right. No, 55. Yeah, this is the convergence point right where we're at right now. So even though we're going up and even though we are seeing calls being purchased, the strike being selected is dropping. And then on the puts, even though puts are now being purchased, the put strike being selected is actually increasing. So you're getting a very neutral, indecisive situation right at a potential resistance zone. I don't think that this is the time to be doing anything. Maybe if we get another turnaround like we did at 9:52, like we did at 10 a.m., you might want to play it. And the entire concept there is you're taking a shot, even if it's a 50-50 shot, you're expecting the reward to be more than the risk. So in the long term, if you take those types of plays, it's going to be profitable for you. But still, you're flipping a coin. But remember, if you're flipping a coin, you can still be profitable. If you flip quarters with a friend and every time you're right, they pay you $2, and every time they're right, you pay them $1, that is a net profitable game for you. So even if you're a 50-50 trader, for whatever reason in the world of retail trading, everyone wants to optimize their accuracy and they think that's the only way to make money. You can easily create a trading system that is right above 99% of the time and still be a net loser. For whatever reason, the retail trading community is obsessed with high accuracy trades, and they don't realize that that's only half the equation. You need to know the size of your average win and the size of your average loss. You could be right 99% of the time, but if when you lose, you're losing 150 times more than you actually make when you win, you're going to be a net loser. In a series of 100 trades, if 99 trades you make $1, but then on that 100th trade you lose 101, you're down net $2. And I think a lot of retail traders fall into that trap thinking they just need to be right all the time. And once again, of course, you want to be right. It just feels better to be right more often than you're wrong. But what's important is the other part of the equation, which the equation as a whole is your expected value. It's the percentage of time you're right multiplied by your average win size, and then you take away the percentage of time you're wrong multiplied by your average loss size. And it's those other aspects of the equation that I'm not seeing people in the retail community like really focus on. They just focus on the percentage of time they're right, not their average win size on a ratio basis to their average loss size. So I don't know, just food for thought. I think there's a lot of people out there who get duped into it. They're like, dude, I have an 85, I have a 90% win streak strategy. Who gives a shit? Are you net profitable? You like, once again, you can have a strategy that's right 90% of the time and you lose money. And you can have a strategy that's right only 10% of the time and actually make money. Like, I think that all logically makes sense to everyone. Like if you're thinking right here, you're like, yeah, that totally makes sense. But it's just not discussed in the world of retail trading. In the world of retail trading, a lot of people get bamboozled into thinking you just need to have the highest accuracy possible. And I am telling you, the most profitable trader of all time, Jim Simons of Renaissance Technologies, they have over $100 billion in net profits. They were able to pull that off by being right 50.75% of the time. They weren't even right 51% of the time. They were as right as flipping a quarter. Not even 51%, and yet their net profits are over $100 billion. $100 billion. So I think that right there should tell you something about maybe your focus should be on the ratio of your win size versus your loss size rather than your accuracy. The most profitable trader of all time, was only right just over 50% of the time, not even 51% of the time. All right, options flow going flat, NASDAQ taking a hit, SPY starting to take also a little bit of a hit. Surprise, surprise, right in this zone. I'm telling you, this will be interesting. If we come below, we might get, I'm kind of watching 5646 because we might have a shoulder that vomits back down to 5625. But right here at this exact moment at 10:17 in the morning, is this the thing I'd be going long on? Absolutely not. That is a weak play. That is a new play. That is not something that you'd want to be doing because you're going long at resistance. Your risk is a bit far away. If that's wrong, we're dripping all the way down here. The options flow is no longer rippity skippity doodah to the upside. If anything, I see the SPYs getting hit. I see people right here. People are starting to buy options. Excuse me, they're buying options, but they're buying put options while calls are flat. Right now, in real time, people are buying 0DTE puts. And why are they doing it? Because they're right at resistance. Oh, potential breakdown. Do I want to try to revert it? It's not necessarily my favorite trade, but it's not bad risk at all. If you're wrong, you're just risking the intraday high. And if you're right, it's a quick vomit all the way down 60 points. Do I like this? Do I like it? Yes, no, maybe so. A little bit of a trend line breakdown. Oh, how does the options market actually look for me? Things are slowing down here. Options are indecisive. All right. I'll give it the old college try. All right. Like I said, this isn't my normal trading style in terms of contracts, but we were discussing it yesterday, and there's going to be a video coming out on Friday that fully details this. But I've realized with these accounts, one thing you can really do to like increase your chances of success is you just have to have the appropriate buffer to be able to survive variance, to be able to survive the bad beats. Speaking of that, is it actually switching? Do I want to reverse it right here? I was hoping that this trend line breakdown was going to go because I saw 1, 2, 3, 4 different candles, but now I'm seeing a bit of a pop. I'm going to give it a second. What's going on in options? What's going on? I was trying to be patient, and then I saw that the SPY options were getting just completely murked, but right here, they're catching a bid now. My reason for the entry was this right here. I just saw the SPY starting to puke. Really, it got going at 10.12. I was like, okay, that kind of makes sense. Like, we're seeing puts being purchased. We're seeing calls locked in. We are at this key level. That was my thought process behind it. But all of a sudden, we caught a bottom right here at 10.19. We're seeing a little bit of a pop up. All right, well, I cannot fuck myself over, so I'm putting in my risk. I'm obviously dropping it even more because if I'm wrong, I want it to be survivable. As in, if I get hit, I get hit. And if I'm right, I'm right. Oh, but anyway, we spoke about it a little bit yesterday, and I have a better explanation video coming out Friday of this week. But generally, when you see me trade, I'm trading one contract. What I'm deciding to do is at the start of all of these accounts, and this is only day 2 of these accounts, what I've decided to do is on a 50K account, you're allowed a 2.5K drawdown, which is only 5%. Even the best traders, the best systems most likely have a 5% drawdown. So that's a very, very small drawdown just due to like when considering the variance of the market. So with that in mind, there is a bit of luck. Like you need a bit of a buffer to build up so you have more than that 5% drawdown. If anything, it's kind of better to have more like a 20% drawdown. Most good systems don't draw down that much. So with a 50K account, the goal is to get a 10% a 10K buffer, which is 20%. So that's what I'm going for is I'm hoping I can catch a lucky volatile period in the market where I'm on the right side of the trend, where I can just basically speed run building that buffer, and then I can return to my normal trading style. Because when I have a normal trading style, my normal trading system does have a 5% drawdown. So even if I start it, if I get unlucky out of the gate, I might have that 5% drawdown and then the accounts are done. So really what I'm looking for is kind of a period of a fortunate market setup where I can quickly speed run that buffer build out, and then I could go back to my quote unquote normal trading system. So that's my current mindset. That's why you see there's 2 contracts right now. And I'm messing around with some of the models in the background of how this works and how this doesn't work. But basically that's the reason why this is a little bit different than what you guys have been seeing from me, is because I've decided that the best time, not really the best capital efficient way, but time efficiency, I basically just need to catch a good streak of like 5 to 8 trading days, 5 to 10 trading days where I can just rapidly build up the buffer, and then I can kind of return to like my normal trading. But basically, I'm just hoping that I can catch a lucky streak. And we're going to see if that lucky streak will be continuing today. I feel like I was very, very patient with it, More so, I was just waiting for actually showing us weakness in the options market. I see the NASDAQ got hit. The Mag 7 stopped going up. It's not really, well, it's a little weak right now. And then I saw, this is why I got in, was because I saw the SPY getting hit. But we might unfortunately be basing a little bit right here. I would love even if it could lock in this first one. That would make me feel much better about my life. But really, we're just going sideways. I was trying to play this trend line breakdown. So I waited for price action to have a bit of a shift. Yes, I am going against price momentum. So that's why I have my risk so incredibly close. But I was just waiting for options to show a bit of weakness. And the real inherent aspect of this is I know we're at resistance. So I'm hoping resistance shows up. But of course, it's a 50-50 shot. When you're at resistance, you might break and run. And if we break and run today, there could easily be, I don't know, a 45-point push all the way up to 5,700. So clearly we stalled out. We ripped up until about 10:07, and since then price has gone flat. It's very similar, except the exact opposite of yesterday. Yesterday, we vomited until 10 a.m. and then we went flat for the rest of the day. Today, we popped until 10 a.m. and now we're going flat. Do I think we're going to stay flat for the rest of the day? God, no. With the FOMC meeting and everything, absolutely not. But as of right now, we almost have the perfect inverse of yesterday. Come on. Just at least let me fill one of these. At least let me fill one of these. Come on. You could do it, Tonto. You could do it, Tonto. There we go. Got a little bit of movement. Let's lock that bad Mama Jam in. Let's lock that bad mama gem in. You could do it. You could do it there. Red Rover, send price action right over. Red Rover, send price action right over. Or just pin my position. Will there be an afternoon show? Of course there will be. On a day like today, on the day of my daughter's wedding, of course there's going to be. There we go. All right, first one locked in. Locked in a nice, looks like $250 per account. And then we have this extra one just in case. So that's nice because it now moves my buffer up by about 10 points. So instead of being at 65, my break even goes up, obviously, by what I just locked in, up to 75. So I have a little bit more of a breathing room, but working. We're working. I should probably move my wrist down a little bit more. But in reality, we're not going anywhere. I mean, yes, price momentum, bullish. That's why I'm a little bit more hesitant because I'm going against price momentum. I'm really just inherently playing it off of this. I guess I'll set an alert here. We'll set up multiple alerts. All right, so we have this breakdown at the 959 low. We have this breakdown at the 1014 low. And then we have this breakout at the 1009 high. So really, we got this nice pump, came down, and we've been range bound ever since. Range bound from 959 up until now. We're not breaking out. We're not breaking down. Options is showing weakness. I'm surprised we haven't broken down because look at the SPY's now getting hit. Lots of bullishness up until 1010, and now the options market is getting smoked. I don't know why price is still going up, but I do see some, there's no more call buying. The call buying stopped at 1009, but ever since then, starting at 1010, there is put purchasing. Once again for the S&P 500. If you're looking at the Mag 7, the Delta kind of drifting down, but overall, still a nice pump up until about 1010. And looking at the NASDAQ, definitely drifting down. We got that pump until 1010, and now we've been drifting down. And I have this position. What is this low? This low is 1018. So let's move this to 1019. I'm looking at this low that we had right at 959. And that's my fill. And if that hits, I'm done on the day. Done on the day with respect to my futures trades. So I don't know. I feel like I explained it all. If you took this trade, you're already up $500. That's probably already a pretty solid day for most people. But remember, I need to be more aggressive in the first week or two in terms of my contract sizing, which means I have to have more discipline in terms of my entry. So if you're going to play bigger, you better be pretty damn confident about your reason to get in. So I need to have a lot of discipline in the entries. And then when I do it, play bigger, and then hopefully just variance and lady luck are on my side and I could get these fills and quickly run the accounts up from 50K up to 60K is kind of where my mind is at. Honestly, should I just set this break even? SPX potentially breaking down mid-range. So the mid-range breakdown, but watch 5646. This is the interesting watch. So we just took out the 1014 low. We do have now lower highs, but we still have higher lows. So it's a bit of consolidation. So you're either waiting for the break of 5660 or the breakdown of 5646. Upon a breakout of 5660, you're then watching 5700. Upon a breakdown of 5646, you're then watching for 5625, which is pretty much the intraday low. So that's the scenario. It's the giant if-then statement. Right now, there's really not much to be done. You're either patient and you wait for the bullish breakout, or you're patient and you wait for the bearish breakdown. Even though price momentum is bullish, I actually favor the breakdown play more just because the options train on the 0 DTE for the remainder of the week and the entire train are all put dominated. I like to trade with the option chain. I much prefer that price momentum is also in line with the premium domination in the option chain. So I just wanted to call that out. And we're not doing shit. Actually, I'm back to my break even here. All right, one thing I need to be mindful of is no longer this stupid trend line, but I do need to be mindful of this stupid trend line. If that breaks, I probably need to ditch. Because that would just be a bullish continuation. Because right now we have the lower highs and the lower lows starting at 1010. If we take this out, that's a new fresh high. And basically the thesis for my trade is completely bust. So on that note, I should actually probably move my stop even more. Oh, just trying to be safe. Just trying to do the right thing. What can I say? I'm just another fellow casino degenerate trying to make the right bet, team. Just another casino degenerate. SPX, once again, we are watching this 959 low at 5646. If you're watching SPY, that is equivalent to basically just below 564. All right, we're back at, there might be support here, 5650. We know that's a key options level. We got as low as 35, and my fill is at 19. Literally, it's at 19 just because that's this low that we saw at 959. So just in case there's a bounce off of it, I should be able to get my fill anyway. And if this does get a fill, I should have a net profit of about $25,000. And if you make 25 grand in a day, you kind of have nothing to bitch about, you know? You spin me right round. ICT, insane clown trader. Oh, ICT is one of the dumbest motherfuckers on the entire internet. The fact that so many people fall for his bullshit explain why so many people are net losers with traders as a trader. It's just because the average person cannot discern reasonable logic from just a complete fucking scam or grift. It really is representative of, I guess, just the frailty of human psychology and our susceptibility to falling for like just the dumbest motherfuckers out there. Truly. If you don't know who ICT is, if you're sitting there and you're like, I had never heard of that, congrats. That it's not someone you shouldn't worry about it at all. If on the other hand, you have heard of him and you're like, oh, is he good? Is he not good? No, he's never had a profitable trading year in his entire career. Yet he has these delusions of grandeur that he created the algorithm of how the market trades. I'm telling you, no singular person created the algorithm of how the market trades. And if they did, they would be a profitable trader. In fact, they'd probably be a multi-billionaire, and they wouldn't be just popping off on the dumbest fucking videos on the internet, giving away the algorithm. If you follow ICT and you believe anything he has to say, you're fucking stupid. He's fucking stupid. He's the most stupid, and people just fall for it. I don't know how they fall for it, but I've never heard of a guy that has taken 18 hours of the most convoluted, just like dumbest concepts to just explain support and resistance. That's all he's done, is he has like reverse spark notes the situation. He's taken a very easy subject and he's then tried to explain it for hours and hours and hours with the most convoluted, stupid bullshit you could ever imagine. So if you happen to be new and you're like, hey, like, is this guy good or not? I'm telling you definitively, he is not. And if you don't believe me, you don't have to take my word for it. Ask him for one shred of proof if he's ever had a profitable trading year in his entire life. And he's not going to do it. What he's going to do is he's going to pop off and say stupid shit like, no, I just trade live. Like, I don't need to show you broker statements. I'll just show you live. I was like, okay, dude, anyone, like, you have a 50-50 chance of being profitable on any given day. At market open, you could flip a coin and be bullish or bearish, and that's not proof you're a good trader. And I know he's not a good trader because he's actually been caught doctoring his broker statements, and he's failed every single Robbins Cup. He's had no shred of trading success ever. He's never had a profitable year. He's never won a trading competition. He makes his money off of just like tricking people into thinking that he knows what he's doing. So please don't fall for it. He is one of thousands and thousands of scammers in this entire space. And one of the easiest things you can do to not get scammed by a guru or furu trader is you just ask them for proof. You just say, hey, just show, like, are you net profitable? Like, can I see your P&L over the past month, over the past quarter, over the past year? Do they call out their trades in real time? Do they have any documented success of profitable years, winning trading competitions? Any person who is that successful, they're more than happy to show it to you. They're not going to hide it from you. Like when people crush it in trading, they like to talk about how they're crushing it in trading. They don't like come up with, oh, I can't really talk about it right now. Like it just doesn't. How does he have 1.7 million subs? Because he bought viewers. That's kind of another well-known thing in this space, is that people buy views, they buy engagements. It's not real. You just buy views. It's not a hard thing to do. I mean, it happens all the time on all these platforms. It happens on Kick, it happens on Twitch, it happens on Instagram, it happens on X/Twitter. It happens all of the time that just people buy it because it increases your social credibility when you see likes and engagement. But he would be a nobody if he didn't buy engagement. And how does he buy engagement? Well, he buys engagement from all the money that he ends up getting through revenue and stuff of mentorship programs, this and that, and then he funnels it back. And then as your engagement grows, people think you're like even more accurate and you actually know something, and it just spirals. Like, this is a well-known thing. If anything, it's just a huge aspect of social media in itself. And it's just the unfortunate stage, I guess, of the current state of retail trading. Tesla double topping up here at 233. Watch for the return back down to 229. Dude, how am I not hitting this yet? I kind of just want to move my stop to break even and not even risk anything now. I kind of want to do it. Just take all, like, I've already locked in a nice 250, so I can guarantee that. I could guarantee that. I could, but then my concern here is the unrealized high versus the realized high and how much that delta grows. That's another thing to consider when you're growing your buffer, is you pretty much always want your realized high to be very, very close, if not the exact same thing, to your unrealized high, because your drawdown is based off of the unrealized high, not the realized. So what that means is if you go up $1,000 and then it comes back against you and you only lock in 200, the unrealized drawdown is based off the $1,000, not off the $200, which is exactly why when you see pullbacks like I'm currently experiencing, that's not good, because the delta between your unrealized high and your realized high is starting to grow. So of course, when they're doing these, like, they're going to make the measurement point the least ideal for you, because obviously these firms hope you blow out. They're trying to keep your money. You're trying to take their money. It's obvious. What I don't like about what I don't like about these prop firms is this idea, or like this very common sentiment from them of like, we're trying to help traders be better traders. We're here with you. No, man, just be honest. They're trying to take your money from the eval fees and all that, and you're trying to take their money from being a good trader and then forcing them to give you payouts when you beat them at their own game. It's so silly to me that any of these prop firms are trying to sit there and be like, no, we're just trying to find serious traders and we're trying to make traders. But no, just be fucking honest. Just be honest about it. Just be 100% honest. We think you suck at trading, and we're going to take your eval fees and your upgrade fees. You think you're good at trading, so if you are good, we'll pay you off. I don't know why they try to spin it as if you're somehow buddies and on the same side of things. You're not. You're not buddies. You're not on the same side of things. I just don't get that at all. Can you do a quick crash course on Greeks? Don't understand. There's no such thing as a quick crash course on Greeks. There's many videos out there. I have videos on my channel. Definitely feel free to check them out. But the Greeks are just there's first order Greeks, second order. Actually, they're easily even up to third order Greeks. But they're just incredibly influential about what's happening in the options market, how market makers have to react to it. It is very, very borderline impossible to be a successful options trader without understanding Greek. So if you're early in your options trading career, I highly recommend spending many, many hours diving into Greeks until you're feel fully comfortable with all of them. But just to explain the importance, the reason I'm able to call out these key levels is because of Greeks and open interest, but it's because of what's going on in the options market that I'm like, oh, okay, this is support. Oh, this is resistance. We broke through. We couldn't get above the high. We came back. It's now acting as support. This is all because of the options market. So I'm telling you, especially like if you want to take trading seriously, and this isn't just like a random thing for you to do for 1 week and just have fun, whatever. If you're going to gamble, like best of luck. But if you're like, no, I want to be a trader, it is the earlier you can wrap your head around the options market and what it means and the Greeks and how the market makers like interact with all this stuff, your trading career is going to just be that much better off. It truly, truly will be. Did I forget to trade on one account? No, that's just my sim account. That's just like the bullshit one that doesn't matter. This is just the default one that comes with NinjaTrader. Why did you choose to trade 20 50K accounts instead of a fewer larger accounts? Because of the ratios. On a 50K account, you have to have a 3K profit without suffering a 2.5K drawdown. That does not linearly scale with the 100K and the 150. The profit target does, but the drawdown doesn't. The drawdown on a relative basis gets less and less and less. So 3K and 2.5, when that goes to 100K, you would expect it to be 6K and 5K. It's not. You have to have 6K profit, but it's less than a 5K drawdown. And then when you go to the 150K, you think it'd be 3X. You'd go from 3K to 6K to 9K in terms of profit target increasing. But the drawdown doesn't go from 2.5 to 5 to 7.5. It's actually less. So on a relative basis, you are given less leeway on the larger accounts. Which is why the 50K for most people is the most popular. Also, not only does it have the best ratios, but it's also the cheapest. So that has a thing to do with it. But with that being said, I just want to add a little bit of a caveat in here. If you're trading a 150K account, but you treat it like a 100K account, as in because that one is the 5K drawdown, that does make sense. So I would say the second most popular one is the 150K, but you have to trade your system as if it's a 100K account because really I'm not focusing on the profit target. It's more of the drawdown that you're allowed. And the 50K is 2.5K, 2,500. And the one that doubles that, it's not the 100K account, it's the 150K account. So if you're looking to play with more of that drawdown, I would say the next option is the 150K. But why did I choose the 50K? I'm just the most comfortable with it. I think there's a legitimate mathematical argument to maybe considering the 150K. But with that being said, I don't think there's a strong math argument to consider the 25K, the 75K, the 100K, or anything above the 150. I think the math suggests that your best options are either the 50K or the 150. And I'm more biased towards the 50K just because I've done the most work with them. So I just feel the most comfortable. Do you have to trade every day on Apex? No, you could take off as much time as you want. You could take off as much time as you would like. What did we just dip to down there? 32. My target's at 19. All right. I'm taking all my risk off the table. I let it tag it right there at 1038. But right now, my stop is at break even. So no matter what, I'm making $250. And if my profits hit, I should make just over 1,000 per account. And I have 25 accounts. Come on. We're bouncing off of 25. Come on, Tonto. Come on, Tonto. Misbehaving. Come on, Tonto. Red Rover, send that red candlestick right over. Red Rover, send 19,819 right over. Red Rover, send price action right over. Red Rover, send 25,000 plus in profits right over. Red Rover, send you, oh, there we go. Bada bing, bada boom. He strikes again. How much money did I make? 23,000 on the Apex plus another 5.5. So I made $28,500 right there, locked in. Just under 30. So 28.5, trading the 25 accounts. Bada bing, bada boom. And that's it. That is it. I am attempting to be as disciplined as I possibly can to aggressively grow the buffer so I can return to my normal trading strategy. But that's it. I'm done trading on these for the day, especially with it being FOMC day. The only other thing I'm going to do, no 0 DTE trades. I'm just going to be managing my swing position. So I locked that in. Obviously, we explained it. I missed the first 2 trades. I took the 3rd trade. It took a little bit longer than I wanted to, but hey, it ended up working anyway. So there we go. Crushed it. Crushed it. Pretty easy peasy lemon squeezy days. Nice $28,000 day. We are getting this breakdown. I told you guys not to chase. Shoulder, head, shoulder. This breaking down right here, you have a potential stop at 5636, but in reality, my major target would be 5625. In reality, my major target would be 5625. What the fuck am I doing? Oh, and folks, very quickly, I mean, if you want to do this, remember, right now, the best deal is with Take Profit. Use that code Goonie. You get 30% off for life and never pay an activation fee. So in the event that you pass the test and go from eval to performance, you don't have to pay an extra activation fee. This is currently the best offering. I will always let you know of who currently has the best offer. Pinned to the top of chat in the description of the video. I like to use both Apex and Take Profit. I let you know who currently has the best deal. Right now, Take Profit currently has the best deal. So if you're interested in this or if you want more accounts, use that code Goonie, Goonie, to get 30% off for life and never pay an activation fee. Obviously pinned to the top of chat and in the description of the video. Here's a very quick look at options flow. Drifting down on the Mag 7, getting hit pretty hard on the NASDAQ, and also the SPY is starting to turn right there. Golly. Golly. All right. Let me update swingers really quick for everyone in the Discord. All right, we did that. If you're in the Discord and don't feel like reading what I just wrote, I'm adding to my current positions. So the positions that I had as of yesterday, just adding a little bit to them. Adding a little bit to them. And we're going to see how that goes. We're going to see how that goes. All right, I'm pretty much done. Like I said, we locked that in, made a good chunk of change over here. I should probably take a quick screenshot of that. Realized P&L. Oh, it's not a bad day to be me. Not a bad day to be me. We'll get this put out into the Twitter sphere. Day 2, looking pretty solid. What was it, like 28K, something like that? Almost 30K. And then just truly to protect myself from myself, because like I see these moves and then I get jealous that everyone else is taking advantage of it while I'm missing out. I literally just need to shut the program down. But first I need to, if you are using Apex Copier, a little bit of a pro tip here, make sure before you shut it down to not only close out of your Apex Copier, but then go over to your Rhythmic and pull working orders and exit positions on all of them. Do that. And then come over here to your orders and also cancel all orders, just so there's no like rogue things firing. And then if you want a sanity check, what you could do is just disconnect. And then when you're disconnected, just do a quick reconnect. And then on reconnection, if nothing fires off, you're good to go. But like I said, my pro tip on that is without a doubt, kill your Apex Copier, shut that part of your Ninja program down, go over to Rhythmic, pull all working orders and flatten your positions and all of that. And then the sanity check is just on the reconnection. And clearly I have no positions, which means I'm good to go. You just shut it down, save it, and then you're good. So literally I need to shut it down. So I stop myself from trading because I've been caught doing that before where I'm like, yeah, I'm totally done for the day. And then I think I see something and then I get into a trade that has nothing to do with my system, has nothing to do with my methodology. It's trading during a time of the day that I don't even like trading anyway. And in all reality, the past 2 to 3 FOMC days, have been absolutely catastrophic for me. For those of you watching the entire first series of those Apex accounts that I was running from December up until early March, a lot of that craziness all happened. Like 2 of the worst days were the FOMC days, the one in December and then the one in January. So like, I mean, when you're trading a leveraged product, like, the chance of you getting in perfectly at the top tick or the bottom tick are very, very low, extraordinarily low. So because of that, even if you're on the right side of the trade, you're probably going to take serious heat at some point or another. And if you are taking serious heat when the vol is picking up, it's going to be super, super painful, because like even one NQ contract is so incredibly levered that it just goes awry so quickly. And I mean, at one point in the last FOMC meeting, I was trading like 6 contracts and I was trading 8 contracts and things were ripping 50 points like it was nothing. It's just, if you don't have the buffer, you can't be trading it. You literally cannot be trading it unless you have that buffer to like just be able to withstand variance. So for me, it is better. Hey, maybe it was skillful. Maybe it was lucky. I don't know. All I can tell you is I locked in my gains, and that's what I'm here to do. Locked it in, shut the program down, and moved on with my life. Right here I see some people asking for the options flow. Mag 7 got a little bit of a bounce, a little bit of a pop right there, but overall, it's been trending weak since 1020. Looking at the NASDAQ, it's actually at the lowest delta reading of the day, and then looking at the S&P 500, the S&P 500 just vomited to the lowest delta reading of the day at 1046 here. So we went from bullish price momentum and bullish options, and then that stopped at 1010. Since then, we have now, obviously, very bearish options movement. Price momentum is bullish still, but it's giving it up. I would say a telltale sign of this getting screwed over is the 30-minute coming back below this EMA cloud. So if you're on the ESM contract, look for it to drop below, 5,680. If it comes below 5,680, which is another 20 points. So basically, if the SPY drops $2, we're at 564. If you see us trading at 562, now you have bearish options momentum and bearish price momentum. And more so recently, you're seeing bearish price action, lower highs and lower lows. So it was bearish, then it was bullish. Now we're kind of going bearish again. Bearish price action, bearish options flow, but the only thing that's bullish right now is price momentum, which is still holding on as bullish. But I'm looking for this retest. Look for the retest of 19,760 on the NQM contract. And then on ESM, once again, 5,680 is what I'd be looking for. And if all of those align, yes, very much the bulls are in control. Very, very much the bulls are in control. All right, cool. Now, before I let you guys go, any questions, comments, concerns? We have about 10, 15 more minutes. I will be streaming later today. So the Fed interest rate decision comes out at 2 p.m. Eastern. Jerome Powell speaks at 2:30. I would very, 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 very much argue you should think of today as 3 different trading sessions, from 9:30 to 2, 2 to 2:30, and then 2:30 to 4 p.m. This isn't one of those, like, the implied volatility is going to remain very, very high until probably 2:45, 3 p.m. Like, if you're a person selling premium today, it's not going to be moving at all because the IV is going to remain so high. Yes, theta is always causing it to decay, but IV is not going to be moving anywhere until somewhere between 2 and 3 p.m. We have the results at 2, Jerome Powell speaking at 2:30, and his speech will probably end around 3:15. So I very much believe you should be thinking of today as 3 distinct different trading sessions. So if you're playing the short term, the 0 DT, that's a very difficult thing because you don't know if 2 to 2:30 is going to help you or hurt you. You don't know if 2:30 to 4 p.m. is going to help you or hurt you. It's one thing if you're swing trading and you're like, I don't care, I'm in this for the next couple weeks anyway, like whatever. But that's why I wanted my scalp in and out, because I wanted to trade, like, quote unquote, within this session. I wanted to be in, wanted to be out. And now that I did that, I'm done. I'm not pushing my look or anything like that, especially because over the last FOMC meetings, I've just had my ass like absolutely handed to me. Absolutely handed to me. Matt, you nailed the 565 spy call today. Yeah, you're welcome. And once again, folks, this call out of these levels, this breakdown, the return to here, like all that type of stuff, this is not rocket surgery. I don't want anyone to think that I'm doing anything special that is outside of your capacity. I just happen to dedicate hours of my life to learning what's going on in the options trading, how to understand Greeks. So I'm telling you, if you put in that time, basically it's how bad do you want it? If you put in the hours of dedicated study and research, you can lay out the levels as much as I do. Of course, I'm more than happy to do it in the morning shows with you. I do my best to explain it to people in the Discord. In the Discord, I do my morning rundown where I explain everything I'm seeing. But it's really not that special. It's one of those things that it feels like a very steep learning curve, but then when you get on the top of the learning curve, you're like, why did I have problems with that anyway? I think it's just because it's so foreign and new, and there's really nothing else like life in this, unless you happen to be maybe a poker player or a sports gambler. There's some overlaps, but the math of it, this is kind of just exclusively where it exists, unless you I don't know, maybe meteorologists, because I know they have to study derivatives because that's a lot of how those models are made. I'm trying to think of any other profession that would use the same math. An actuary, I guess. So maybe if we have some actuaries in here, it would be pretty easy math for you. But for most people, this is a completely foreign concept. So that can seem intimidating, but I'm telling you, it's really not that bad. You just got to keep grinding. And then is the grind itself worth it? Well, yeah, dude. We called this out, about to call this out. I'm calling for a reversion to my first target would be 5636. That's just a technical support. And then really the options level of 5625. And then if that doesn't hold, I'm calling out 5614. So is it worth it? Yeah, because if you do it right, you can make a shitload of money. So yes, I would very much argue that it's worth it. So I get that it's intimidating. I myself, when I first started learning, I was like, holy shit, my head's spinning. There's a lot. And I just don't want anyone listening to this, if this is what you really want to do, don't let yourself get deterred from the fact that it is pitched as being seemingly difficult. I'm not saying it's easy, but I'm saying there's other aspects of trading that are much more difficult, such as your impulse control and your discipline. The actual mathematics of trading, the understanding of what to do in any situation is relatively simple. The hard thing is getting yourself to do the thing you know you should be doing. And I know that sounds comically easy, but for whatever reason, it's not. When you're in the driver's seat and you're slinging the positions and actually trading, you feel like a crazy person sometimes because you're like, wait, I know this is the right move, and yet I'm doing the opposite. That's the tough part of trading. That is 100% the tough part. No Maddie G. Am I Maddie G? Tips on passing eval, having a rough time. Oh, yeah. Okay. You didn't hear it from me. But passing in Apex eval is the easiest thing. The other ones are more difficult. Top step, take profit, whatever, FTMO, all of them. Whatever it is, Apex is the easiest to pass. Why is it the easiest to pass? Because you can pass in one day and there's no consistency rule and there's no daily loss limit. When you have no daily loss limit, there's no eval consistency rule, and you can pass in one day. It is the perfect situation to buy 2 accounts, set up your ATM where you buy max accounts, and then you make one go long and one go short at a major event, such as a 2 p.m. FOMC interest rate decision. Because the bet here is that you don't know if it's bullish or bearish. You're just betting on a large move. And if you have a 50K account, I'll just give you the math for the 50K account. You're allowed to trade up to 10 contracts. If you trade 10 contracts and you go for 64 ticks, also known as 16 points, you're going to have about 3.1K in profit, which is exactly what you need to pass. So you're just betting that there's a 16-point move. One's going long, so if it's bullish, that one passes. One's going short, so if it's bearish, that one passes. It's very, very easy. If you look on Apex's website or other aspects of the internet, the pass rate is around 45%. Think about that. Why is it pretty much 50-50? It's pretty much 50-50 because everyone's fucking doing it. And it's not exactly 50 because of maybe it goes up and comes down and you get knocked out with the drawdown, whatever. There's freak things that can happen. So your pass rate should be just below 50%. Once again, you can only do this for evals because if they catch you doing this with PAs, they just won't pay you out because it's waterfall, but they don't care if you do it on evals based on their current set of rules. So yeah, that's the tip. You go long 10 contracts on one account, you go short 10 contracts on the other account, max contracts. You set up the order beforehand, so your profit line is exactly where it needs to be, and you put on the trade right before the announcement comes out, whether it's an inflation report, a Fed interest rate decision, some big announcement from Trump, whatever. You're just looking for a quick, decisive move that should be in excess of whatever your profit target is. And if you look at 16 points on NQ, that's not even 50 cents on QQQ. It's not. It's like 45 cents. So basically the argument is will we have at minimum a 45-cent move on the Qs because of an event? Most of the time you do. Of course, there are the freak things where you just get a muted movement or it whips you at first, but most of the time, the initial print is that big that you're going to get in and get out. So is it a foolproof plan? No. Is it cost efficient? Absolutely not. Is it time efficient? Absolutely. So it's, what are you trying to optimize? Are you trying to optimize your time efficiency, or are you trying to optimize your financial efficiency? If you're trying to optimize your financial efficiency, well, that's just you having a good trading system. And if the system is good, it'll build up for you. But it's not time efficient. If time efficient, you're just like shoving them across the finish line. Can you do that with 40 contracts, 20 one way and 20 the other? I don't think you mean contracts. I think you mean 20 accounts, 40 accounts. Yeah. I have 300K accounts. How do I pass today from Powell? Literally the math I just explained to you. I literally just gave you the format. If you can't convert the math yourself, maybe trading isn't for you. I'm more than happy. Like, I just gave you the entire insight, but I'm not going to fucking hold your hand. You're not my child. How do you pass? I literally just told you. If you can't then use the information I just gave you to backtrack it and apply it to your own accounts, trading is probably not for you. I'm more than happy to teach you what I know, but I'm not going to fucking gargle your balls. I mean, you have to have a little bit of like a self-starter attitude here. Like, if you're expecting to always just be helped and someone to fucking hold your hand, like, what are you doing, dude? How could you possibly ask me how to do it after I literally just explained how to do it? Like, do you want me to do the fucking math for you? It's basic algebra, dude. Like, you have to have like a little bit of like self-drive in this situation. What is a prop firm? Well, what you're asking is, what is a SIM-defunded prop firm? Prop firms themselves are actually different, but right now SIM-defunded prop firms are becoming really, really popular. And basically it's paper trading. You take a test on a paper trading account, and the test is hitting a certain profit target without having a certain drawdown. If you pass that test, you get moved from an eval account to a performance account, which is still a simulated account. Your orders are not actually hitting the market. If you trade well enough, you get payouts. Like, you could request money out, and if you do poorly, you just blow out the account and that's it. Like, it's not like you lose all that money because it was sim money anyway. I came for the stock advice, but I really only stuck around because I thought I might get my balls gargled. Not sure. I mean, it's just, I'm truly happy to help and share some knowledge. But when I see people who are just being like legitimately lazy, like, and just, they like nothing, like they don't even try to do like basic reasoning, a basic Google search. Like, it's just, it's a waste of my time to answer that stuff, because a person who already has that type of a personality is not going to make it in trading. To make it in trading, you very much have to be a self-starter, because it's only on you. It's only on you to study and to journal and to learn more and to chart and to seek out resources that give you information. So, I mean, generally I'm answering the same question like literally thousands of times ever since I started trading, and I don't mind that, or started streaming. I don't mind it, especially if it's for people who have that type of personality and attitude to begin with. But when I get the most rudimentary questions that like they just put in no effort to find it themselves, like, it's whatever, I could answer it, but it's a waste of my time, because that person's going to be like, they're going to fail at trading anyway. It's just, yeah, they're going to fail at trading anyway. You have to have like a bit of self-drive to pull it off in this game. And by a bit, I mean you have to have like a shitload, like an absolute shitload. All right, right now, price is not doing anything. Oh, options are picking back up a little bit. Mag 7 completely flat, a little bit of a pop in price. The NASDAQ is completely flat after selling off, and the SPY is getting a little bit of a reversionary bounce that I would predict to fail. Right here, we're probably getting puts locked in. Yeah, exactly. Right here, you get some 0DT puts locked in, and now they're going flat. So you just had some put players right here because they've been buying all day, buying puts, just hitting the cash register, and they're doing it on a weird level at 40, which was the high at 933, the high at 948. I'm surprised they didn't want it to go a little bit lower, but yeah, this last 3 minutes, the last couple minutes, this bounce, it's not from bullish aggression, it's just from puts, people locking in their profits, which makes sense. They might not want to play the FOMC. Matt, what is your goal? Like, when are you going to take a vacation? I don't really have a goal like that. I guess my goal is just to continually build out trading systems that I think, what is this? That I think are net profitable, and just let them trade and trade and trade. So buy 64K accounts, go long on 57 and short on 35, and SPY stay flat. I get rich. What? The fuck are you saying? Buy 64K accounts, go long on 57 and short on 35. Johnny Tequila, have you been having a little bit of tequila this morning? I don't even know what that could possibly mean. Buy 64K accounts, go long on 57 and short on 35, and SPY stay flat. I get rich, yes? I think it's getting crazier every single fucking time I read it. Yeah, I don't know. I'm trying to decipher this, but yeah, dude, do that. Financial guarantee. That's how you get rich. I'm having what he's having. All right, folks, we're going to have to pause it here for a second. If you want to check this out right now, the best financial offering is from Take Profit, but you could also do it on Apex. Apex is easier to pass the test on both Apex and Take Profit. The code GOONIE is going to get you cheaper accounts, GOONIE. For right now, we're going to pause it, but we're going to be back at 1:45. The Fed interest rate decision comes out at 2 p.m. Jerome Powell speaks at 2:30. This is all in Eastern time. So at 1:45 ET, we will be streaming once again. So I'll catch you guys in a couple hours. I would highly recommend right now doing absolutely nothing, because we're going into lunch right before a big announcement. Whatever the price is or isn't doing right now, it really doesn't fucking matter. So this is a good time to do nothing, to just chill, just to relax, and then kind of come back when we actually have an event that's worthwhile to trade on. So I wouldn't worry about anything right now. I wouldn't worry about breakouts, breakdowns, price movement. Of course, you should always protect your risk of like that's a minimum. But with respect to entering a new position, there's truly just no point at this exact moment. So I will catch you guys all in about 2 to 3 hours. I'll catch you at 1:45 Eastern. Don't forget to have on your notifications just so you guys don't miss it. But we will, we're going to be on Rumble. We're going to be on YouTube. So wherever you watch me, just make sure your notifications are on. We'll be streaming once again at 1:45 today. So I hope to see you there. I like all the vibes. I appreciate all the vibes. Thank you. Peace.